Good morning. Thank you for joining us today. Apologize for the delay there. We had to swap out a computer, but everything seems to be working. Everybody can hear everybody else. So my name is David Talbot. I'm Managing Director, Head of Research at Red Cloud Securities, and I'm delighted to host a Red Cloud webinar on uranium today. We are going to hear from Atomic Minerals President and CEO Clive Massey. Now, during today's webinar, he will provide an overview and outlook, and then we'll take some questions. We'll get to as many as we can. You can type your questions into the chat box at any time. But before we kick things off, first we need to discuss the fine print. During this Atomic Minerals webinar, forward-looking statements may be made. I direct listeners to their forward-looking statements outlined on page 2 of the Atomic Minerals corporate presentation. That can be found on the company's website, atomicminerals.ca. For Red Cloud Securities, I'd highlight this webinar is for information purposes only. It should not be considered a solicitation or recommendation to buy or sell securities. We note this call does not consider the particular situation or needs of individual investors, and participants should rely on their own investigation, seek their own professional advice before investing. So please see our most recent research located on the Red Cloud website for specific disclosures on Atomic Minerals. And with that, I'm now going to turn it over to Clive Massey. Clive.
Good morning, Dave. Thank you very much for having me and organizing this. I'm ready to start with the presentation as soon as you are. I formed Atomic Minerals a number of years ago as a function of recognizing that we were going to have a continually strengthening uranium market. And while we were a bit ahead of the cycle, it turns out that we were in fact right. Since I formed this enterprise a number of years ago, the price of uranium has gone from $38 a pound, $38 a pound to approximately $73 a pound. So we're very enthusiastic about what the future holds for uranium and what the future holds for the company. So our corporate objective really is we believe very strongly in the Southwest U.S. has a number of areas which host mineralization very similar to areas of previous discovery in the Southwest U.S., some of which have produced very large discoveries in the past. And so we are looking for those kinds of ore bodies. Those ore bodies are generally hosted in the Mossback member of the Shinle Sandstone Unit. So we're looking at to develop new areas that have been overlooked in terms of exploration. And we're focusing on the United States as a result of the fact that it's got generally a mining-friendly atmosphere. We recently restructured the company. We have 13.5 million shares out, 620,000 options, and on a fully diluted basis, we're at 21 million. We've got 7 million warrants. All of those at the moment are a long way out of the money as a result of the previous consolidation. As Dave mentioned, I'm the president and CEO of the company and also founder. I have been in the mining industry for approximately 35 years, had a number of successes and a number of failures. My last uranium company, which I founded during the last uranium bull market, I founded it at $11 uranium, and we picked up a whole host of assets, again, in the Southwest U.S. We also picked up an asset which was in the Central Labrador Mineral Belt, which we drilled. And when we drilled it, we discovered what was known as the two-time zone, and it was really the only new discovery in the last uranium run-up. And we paid $1 million in exploration and cash for that project, and we structured a deal to we purchased 51% for cash and exploration costs, which totaled $1 million, and we sold it back to our joint venture partner, the 51% interest, for $141 million. However, as a result of the collapsing uranium market and the credit crunch, which was soon to follow, which was This was in 2008. The deal came unraveled. But the point is, we know what we're doing when it comes to finding an asset and selling it off. Alex Hemmel is a CFO and director of the company. Foster Wilson is a geologist and previously ran Mesa Uranium, very experienced geologist in the uranium field. Dick Dorman, also very experienced in the uranium field, cut his teeth in Lisbon Valley on the Colorado Plateau in the uranium business originally, and specifically worked for Atlas Minerals for a number of years. Very experienced, as I say, in the uranium sector. Jamie Hyland is also director of the company, and Jamie is our IR ambassador about town, if you will. Mark Steen. Mark is a very interesting guy. He works for us in a consulting capacity. Mark is also a graduate of the Mackey School of Mines, as is Foster, as well as Dick. In fact, they all attended university together, as well as Jeff McCleary. And Mark's father discovered the Big Buck, the Mavita, and the Standard uranium mines, which were on the Colorado Plateau in Lisbon Valley. They had the thickest the highest grades and the thickest mineable widths of any uranium mines ever discovered at the time of their discovery. And we're using the same geological model, essentially, that Mark's father interpreted, which later led to his discoveries. Jeff McCleary also works for us in a consulting capacity. And the projects which we currently have in our U.S. portfolio are projects that we picked up as a result of recognizing not only the right geological structure, but on the Colorado Plateau, since the 1950s, there's been an enormous amount of drilling by oil and gas companies. We identified these projects by having Jeff do an extremely in-depth analysis of these drill holes. And the analysis of these drill holes led to a number of holes which not only host the favorable sandstone unit, but they host it in mineable widths and also very high-grade material. So that was the basis of the staking which we've done. So just a quick blurb on the uranium itself. We see it as likely the most cost-effective solution for meeting the looming worldwide electrical shortage, which we believe is coming, specifically if we continue to embrace electric cars the way that we are. In 2021, we were using approximately 17.7 terawatts of power. By 2050, if we continue the path we're on, we're going to need 70. So solar, geothermal, and wind have scale issues, economic issues, and we may have trouble getting the materials to build them as well if we do away with fossil fuels. Nuclear energy is it's clean, it's effective, it's efficient, the waste can be managed, and while people have somewhat of a negative view about uranium in terms of, Fukushima, 3 Mile Island, the real reality is that at Chernobyl, if those engineers had read the manual correctly, that your reactor wouldn't have exploded. 3 Mile Island was a let off of some radioactive steam, which was really a non-event. And the others also, the Fukushima, who builds a nuclear power plant on, Tidewater? They were asking for a problem. So we expect uranium prices to continue to rise dramatically, as they have in the last couple of months. There are various pundits predicting $200 uranium, and some are higher. And in terms of demand, you can see from this graph, if you do all the numbers here, which I will do for you, there are 450 nuclear power plants worldwide that are either in the under construction, planning phase, or the proposed phase. So this is going to continue to drive demand. Not only these and what's going to drive demand for these nuclear power plants is moving away from fossil fuels and continuing to embrace EVs. And I'm sure you're all aware that in California now, they have legislation You're not even able to use a gas-powered weed eater or lawnmower any longer. And in California, they already have rolling brownouts when everybody turns on their air conditioning units. So I don't think there's much question about the demand for nuclear power going forward. So as I mentioned, we're focusing on the Colorado Plateau, which is an area, as you can see from that map on the right, which embraces New Mexico, Arizona, Utah, and Colorado. Colorado Plateau itself is marked in blue. The areas which, the dots on the map represent areas of past production and previous discovery. In total, the Colorado Plateau has produced, this slide is actually incorrect. I know it says 328 million pounds. It's actually 597 million pounds. So this is specifically why we've embraced this area. And again, this is the area which has seen literally thousands of drill holes drilled by ConocoPhillips, Gulf, Mobil, Getty Oil, and a number of others. The geological structures that we are focusing on are salt wash anticlines. As you can see on this map, there are a number of them outlined on this graphic. The projects that we actually have at the moment are the 10 Mile anticline, the Harts Point anticline, and the Dolores anticline. These three anticlines were discovered based on the previous discovery of the Lisbon Valley anticline, which took place in the 1950s. And that's where the Big Buck, the Mavita, and the Standard mine were discovered. The discovery of those mines led to the subsequent drilling of approximately 6 million feet of drilling and the development of 13 other uranium mines. So it's a very prolific area. It's currently mined out, but the geological model is identical to that of Harts Point, the Dolores anticline, and the 10 Mile. Just to give you a quick overview of an anticline. An anticline is a elongated rise on the horizon, which would have had approximately 350 million years ago. I'm just going to go back one slide. There would have been a very large fluvial system that ran through this area. This would have been during the time of Pangea. This fluvial system carried the uranium in question, and the uranium settled around the flanks of these anticlines. The Lisbon Valley, the cartoon on the right is one of actually the Lisbon Valley anticline. The brown area on the right side is an eroded area. It was thought one time that uranium would exist on that side of the anticline, but as it turned out, it was eroded. So the red amoeba-shaped features on this map represent all of the past producing mines with, I'm not sure if you can see my cursor, with the Big Buck, the Mavita, and the Standard being in this area here. Up at the top, if you look very closely, there's the Lisbon Valley mine. The Lisbon Valley mine was the last mine to go into production in Lisbon Valley. And it produced 21 million pounds at an average grade of 0.41 from an elevation of 2550. And the significance of that, I'll come back to in a moment. Here is a cross section of what the general area looks like in terms of its sandstone formations. The Shinli, which is the favorable sandstone unit, which has produced most of the uranium on the Colorado Plateau previously. There is also another sandstone unit which has produced uranium in the past, the Cutler. However, Cutler deposits are generally of lower grade and are much smaller. So as I say, we're focusing on the Shinli, and it's shown here in orange. The project that we're focusing on the moment is our Harts Point project, which is in San Juan County, Utah. It's currently joint ventured with Kraken. They can earn a 75% interest by spending $1.5 million. This gives them a 65 to 75% interest. They can spend an additional $2 million over 30 months to add that 10% to get to 75%. Kraken's paid us $2 million in this joint venture, and there's a 2% net smelter royalty. And after the initial option, Kraken will have 75 and we will have 25%. What attracted us to the Harts Point was the drill hole, oil and gas drill hole database, which we had access to. The project itself is very large. It's 324 claims. There are a number of oil and gas holes which are represented on this map in red that are separated by approximately 2.8 miles. What's interesting about these three holes is that they intersected the Mossback member of the Shinle at almost at exactly the same elevation in each hole, approximately 1,100 feet. And the gamma kicks, which one gets out of these holes, are literally off the scale, which is beyond 700. And the mineralization itself, or the thickness of the Shinle, is of almost the identical thickness in each hole as well, which is approximately 11 to 14 feet, depending on which hole we're speaking of. And the other thing that's interesting about this project is that it's very close to the White Mesa uranium mill, should we make a bona fide discovery here and it goes into production. The area which is shown in blue here is essentially a valley bottom, and the area shown that's in light yellow is actually at the top of a mesa. So the faces of that mesa, which is what we're looking at here, had some very small scale mining during the 50s and 60s, which produced approximately 42,000 tons. And that production was from the Shinle, the Mossback member of the Shinle sandstone unit. And you can see it actually protruding out of the face of this cliff right here. I'm not sure if you can see my cursor, but it runs all the way along the face of this cliff. And our drill hole sites are approximately only about 175 yards east of the top of this mesa. The project, skipped ahead one. The project is currently permitted. There's an issue with the BLM at the moment, which is really an administrative issue that we're working through, and we expect to be back on the ground drilling very, very soon. That summarizes the Harts Point project. We also have our Dolores anticline. In terms of the geology, it's very similar to Harts Point. Again, the same geological model as Lisbon Valley. It's in San Miguel County, Colorado. What attracted us to this area originally was that it had seen various production during the 1950s and 60s. It's also in the salt wash member of the Jurassic Morrison, which hosts the Shinle Sandstone Formation. It's had some small scale production. It's at the southern end of the Uravan, which has produced about 75.5 million pounds. It's not a particularly large project. It's 50 claims. It covers the area which we think is necessary. The three stars, which are within our claim block, which is represented here in the cartoon on the right, or I should say the plan view on the right, showing our claim block in pink. Those drill holes also have ore grade interceptions of uranium in them as well. So we will be in the process of permitting this project very shortly. We also have the 10-mile anticline, which is in Grand County, which is north. It's about 75 kilometers northwest of the White Mesa uranium mill. And that being said, the Dolores itself is about 50 miles from the White Mesa mill. So they're all in close proximity to potential production should we actually make a discovery here, which I'm quite sure we will. So again, the staking which took place at the 10-mile anticline was based solely on previous drill hole data. So it's a large project. It's 521 claims. The claim blocks which we have are indicated here by the black squares. And if you can imagine that we are at the nose of the anticline here. So there is so the claims on the left side of this cartoon are on the left side of the anticline, and the claims that are on the claim blocks on the right are on the eastern side. So we've staked both sides of the anticline, which is where the mineralization is likely to be. There are drill holes also in the area which indicate off the scale uranium mineralization again. In two different sandstone units, we have them here in the Cutler as well as the Mossback. Now, I mentioned the production which took place at the Lisbon Valley mine, the 21 million pounds at an average grade of 0.41 at the 2550 level. Now here, the mineralized sandstone unit is at a much greater depth. Depending on where we are on the anticline, it varies anywhere from 1,400 feet to 2,500 feet. We will be putting this project into the permitting phase very shortly, and expect to be certainly on the ground drilling by next spring. As far as our U.S. projects go, we'll be drilling at Harts Point very shortly and putting both the Dolores and the 10-mile through the permitting phase, and expect to be drilling there anywhere from early next year to spring. We also have some projects in the Athabasca Basin. These are very early stage projects, which all of them are up for joint venture at the moment. We have the Mitchell Lake project. Mitchell Lake project is contiguous with the UAX Corporation's project. It's had a number of exploration done on it so far, which indicates an EM anomaly, which follows the kind of trend we like to see in these types of geological environments. And it's an early stage project, but we believe at this stage it has the right signature to potentially be an area of discovery. So as I say, we have that project up for joint venture. We also have the Hamilton Lake project, which is in northern Saskatchewan. It's an interesting project. It's a fairly large project. It's 2,970 hectares. It's on strike with a 200 million pound U3O8 resource that Pia Rare Earth and Uranium Corp Alice Lake project. Again, relatively early stage project. Initial EM surveys suggest that it's got the right potential earmarks for discovery. So again, we have this up for option. And that essentially covers all of the projects which we have in our portfolio at the moment. And I'd just like to mention that at the moment, we also have an open private placement. I'm currently raising $1 million at 7.5 cents. That unit consists of a 7.5 cent share and a 10 cent 3-year warrant, full warrant. So as I say, that private placement is currently open, and anybody who is able to is welcome to participate in it at this stage.
Great. Thank you very much, Clive. Very informative presentation there. We will now kick off the Q&A portion of the webinar. A reminder to everybody on the line, you can type your questions into the chat box and we will get to as many as we can. So, Clive, why don't we start it off a little bit, 30,000 feet. Do you think this uranium price is sustainable? I think for the first time in the past couple of years, the price rise isn't solely due to physical buying of uranium, but it's all about increasing demand and lack of incentive to explore for uranium or develop projects. And these lower supplies aren't necessarily going to be able to keep up with the demand. And the WNA came out in September, even said that not all nuclear utilities are going to get the uranium they require. So, have we turned the corner? Is this price increase sustainable? What do you expect?
Well, I believe that it has, Dave, and I believe that it's going to continue to increase as well as the demand for uranium continues. I mean, with the number of nuclear power plants that are currently in production, even in China alone, and they've got another, from what I understand, 200 power plants, roughly 200 power plants in the planning phase. It's the only way to manage what I see as being a gigantic looming power shortage. The U.S. Power grid is already maxed out, and uranium is really the only sensible alternate method of generating enough the power we're going to require. So yes, the answer is yes, Dave.
Great. We're on the same page there. And now, over the past month or so, producers and developers have really enjoyed that price appreciation on, higher uranium prices. But the explorers haven't yet seen that big bump. I do think that things have been better over the past week or so, but what do you think is going to attract investors to the junior companies?
Well, I think that a couple of things. If you look at what's transpired historically in the junior sector, a new discovery would, I think, help. While there's been a couple recently, I think the more the merrier, so to speak. But I think that, as we both know, there's a lot of uncertainty in the broad markets at the moment, and I think that uncertainty is trickling down into the junior mining sector, whether it's uranium, lithium, gold, copper. It's all commodities at the moment, I think. And so we've got to have a change in that direction. We've had a strengthening of the overall broad markets yesterday. They all had a very, very good day. So, maybe maybe the worm has turned in that respect as well a little bit.
Mm-hmm. Yeah, I think that's the Fed signal that they're not going to be quite as harsh or hawkish.
Right, exactly.
So good. Now, what has attracted Atomic Minerals to the Colorado Plateau? Was this something that was planned, or is this opportunistic, given the fact that you were able to get your hands on some of that oil and gas data and were using that to look for radioactivity?
Well, I guess really what attracted us to that area historically was that when I met Mark Steen and realized that he had the background that he did, with his father having made those discoveries and so on. And it was actually a geologist who had worked previously with Mark, who the light bulb suddenly went on one day. This would have been in the early 90s. Hey, the best way to find some more large uranium deposits is on these salt wash anticlines. And the best way is to look at all these oil and gas drill holes. So it was Mark that came to me with this concept, many years ago when I actually formed Universal Uranium. And then when the uranium price started to strengthen, I called Mark and I said, hey, are those things still open? And in the meantime, we had a huge database left over from the days of Universal Uranium that we hadn't bothered to pursue. So we hired Jeff again and continued to pursue that database. And that's what led to the staking of each of these projects that we have. And then, of course, as I mentioned before, the Colorado Plateau has been very prolific in terms of production. I mean, 597 million pounds. So, Mount Taylor is also in the Colorado Plateau. That's one of the largest undeveloped uranium resources there are. I think it's 720 million pounds, I believe. So that's what attracted us.
Yeah. So your plans are to stick around these anticlines and look for mineralization, either on the project have or potentially look for other projects as well.
Yes, we have, if you can believe it, we have roughly another 1,300 drill holes to analyze. And we also have a number of other targets which we've identified, which are in the Southwest US as well. They're currently unstaked. And some of those funds that I would like to raise will carry on with staking some new targets as well.
Okay, great. Thank you. Now, you've optioned the Harts Point property to Kraken as opposed to working it on yourself. You also mentioned that you have some Athabasca projects available for option. Is this a transformation of Atomic Minerals to a project generator? Is this something that we should expect?
No, it's not, Dave. We intend to, do our own thing, so to speak. But I'm sure you know Garrett Ainsworth and Matt Schwab very well. And they approached us on the project. And, I think anytime you can tie your wagon to two fellows like that, especially with the number of discoveries that they have under their belts, I mean, arguably they're, two of the most respected young guys in the uranium sector. So when they approached us, I was, like I say, very happy to do business with them, so to speak. I think it speaks volumes for the project themselves that, a company like Kraken Energy would be interested.
Mm-hmm. Okay. And that Dolores anticline, does the vanadium that you find there in the Uravan district provide added incentive for exploration and development of these properties?
Not really. I mean, it's a byproduct, but the real focus is on the sale of any of these projects, once we've made a discovery, the same way we did with Universal Uranium. The focus is really on the uranium.
Okay. And once you get that Dolores project permitted, what are your exploration plans when that comes along?
We're going to permit it for 5 or 6 holes. And with any of these projects, that have previous drill holes on them that we've identified mineralization in, and I should have said this earlier, is the plan is to essentially twin these holes to start with and make absolutely certain that what the oil and gas drill hole data indicates is actually there. And then drill some holes in the middle ground between these holes and see if the two are connected. I mean, if you look at the 3 holes at Harts Point, 2.8 miles apart, that's a very large area. That would represent a discovery of literally hundreds of millions of pounds of uranium with those grades and thicknesses. But to be realistic, those types of deposits are usually small amoeba-shaped things which encompass, 70 or 60 feet, by 40 or 50 feet by, they have been as much as 50 feet thick, but more typically, 10 to 15, 10 to 20 feet. So I suspect that maybe the 2 southern holes are connected, but the more northern hole, I think it's unlikely. It's probably a separate ore body that the drill hole's gone through. Mm-hmm. So to come back to your question, we're going to drill test the project, and that'll probably be the next project that we drill test. Only with this uranium price, drilling at 2550 to that depth, I think we'll get more traction at Dolores.
Right. So that makes really Dolores your flagship project with Harts Point optioned off? I
suppose, yeah. That would be a good way to summarize it, yes.
Okay. So, and that 10-mile, anticline, that does look like an earlier stage project. Uranium is deeper in the Chinle formation there. You think that's going to be something you put in, not necessarily on the back burner, but that's something that follows up Dolores?
I think it'll follow up Dolores, depending on, what we find. I think, again, it's important to remember that, 2550 sounds awfully deep. But Lisbon Valley produced, 21 million pounds, an average grade of 0.41 from that same elevation. And that was done with room and pillar mining. So it demonstrates that with the right uranium price, you can run a very productive and profitable little uranium mining operation. So, I think there's a great opportunity that exists there, but we've got to have a stronger uranium price for the question.
Yeah, and that's typical for this area of Utah and Colorado. They're all relatively small, mid-sized mines that really all feed into larger mills that are off-site. It's typically,
generally that has been been the trend, and a lot of that production, that smaller scale production, came out of the Cutler and came out of the Uravan. But the large-scale production came out of Lisbon Valley. In fact, Lisbon Valley produced 81% of all the uranium produced on the Colorado Plateau. And at the time that Lisbon Valley was discovered, they didn't understand the geology of these anticlines. So and they really didn't by the 1970s. It wasn't until the early 80s when Atlas Corporation got into the game that they understood the geology, and they started realizing that there are other salt wash anticlines in the area, and that uranium from this fluvial system that ran through there. And when I say fluvial system, I'm talking about a river that would have been like the size of the Ganges River, at the height of its flow. And it deposited uranium. There's no reason to believe that it didn't deposit uranium around the flanks of these anticlines the same way it did at Lisbon Valley. And so when we talk about areas that have the same geological signature of those of where large discoveries have been made, we're specifically talking about these salt wash anticlines that have been overlooked and have had little or no exploration on them, other than from the oil and gas sector, who never even checked them for uranium.
Right. So it sounds like you are not done with your M&A activity. If you guys can find something else, you might pick it up, either stake or...
Oh, absolutely. Absolutely.
Okay. And you said another 1,500 drill holes need to be reviewed, oil and gas holes. Are those on existing properties, or would those lead to potential staking?
They would lead to potential staking. Like I was saying earlier, we've actually identified 3 other areas which would merit certainly the staking of a few hundred claims. And this is, again, from looking at this drill hole data.
Mm-hmm. Great. Now there's uranium in a lot of places out there in the Southwest US.
It's one of the most, it's one of the most mobile elements that there are.
Yeah, I've got a lot of minerals in my collection from the area. So.
Yeah, the trick is just finding it in economic amounts.
Absolutely. So where, I guess let's wrap up here saying, where do you want to take Atomic Minerals? What do you think it's going to look like a year from now?
Well, I think a year from now, we'll have a bona fide discovery at Hart's Point. And that's going to shed an entirely different light on the entire area. Just as a interesting piece of trivia, San Juan County, when Lisbon Valley was in production, it was the wealthiest county anywhere in the United States on a per capita basis. That's how much cash was generated. Mark's father in the 1950s, by the time he'd paid all of his employees, paid everybody that worked at his privately funded uranium mill that he built, he had $150,000 left over every month. And if we make a discovery at Hart's Point on a scale on the scale which was of those which were made at Lisbon Valley, it's going to alter the economics of that entire area enormously.
No, I was just in San Juan County last month. That White Mesa Mill,
yeah,
is certainly in good shape and ready for feed. So yeah. Good.
All the right infrastructure's there. And, as you know, it's a relatively mining friendly area, compared to California and any number of other places. So
absolutely. Good. Okay. Well, thank you, Clive. It was great talking to you today.
Thank you, Dave, for hosting this. Really appreciate it. And nice to see you as always.
Thank you. And thank you to everybody else for tuning in today. Reminder that Red Cloud will be hosting our Fall Mining Showcase next week. So this is in person on November 7th and 8th at the Sheraton Centre Hotel in Toronto. We have 96 companies, 5 keynote presentations there. Uranium focuses on November 7th. We've got about 16 companies presenting that day, a couple more on the next day. So you can still sign up at redcloudfs.com. So that, once again, that's redcloudfs.com. So have a great day, everyone. Thank you, Clive.
Thank you, Dave.